In the world of real estate, there are several key metrics that buyers and sellers should be aware of when navigating the housing market. These metrics provide valuable insights into the current state of the market and can help both buyers and sellers make informed decisions. Today, we will be discussing the correlation between 5 very important real estate metrics: months supply of inventory, 12 months change in months of inventory, median days homes are on the market, list to sold price percentage, and that median sold price. Stay tuned to the end of the video also to make sure you get the latest on interest rates across the board and what we've seen and what we expect in the near term. As always, if you do have any questions as you go throughout the video today, don't hesitate to comment those below or feel free to call or text me anytime. I'm more than happy to answer your questions personally. I absolutely love talking on the phone, so give me a call because I know this can get a little bit complicated sometimes, and I'm certainly happy to sit down and clarify any of that stuff for you. Let's start by talking about the month's supply of inventory, which currently stands at 3.38. This metric represents the number of months it would take to sell all the available homes on the market if no new properties were listed. A lower supply of inventory typically indicates a seller's market, where there are more buyers than available homes. On the other hand, a higher supply of inventory suggests a buyer's market, where there are more homes available than there are buyers. In our case, with a supply of 3.38 months, we can say that the market is leaning slightly towards the seller side, although it's still relatively balanced. Next, we have the 12 months change in months of inventory, which shows a significant increase of 69%. This metric compares the current supply of inventory to the supply of inventory from the same period a previous year ago. A positive percentage indicates an increase in supply, while a negative percentage suggests a decrease. In our scenario, this increase of 69% indicates that there are more homes available for sale compared to this time a year ago. This could be a result of various factors like increased construction or a slowdown in buyer demand. It's worth noting that this increase could potentially shift the market dynamics towards a more buyer-friendly environment. Moving on, let's discuss the median days homes are on the market, which currently stands at 19 days. This metric represents the average number of days it takes for a home to sell after it was actually listed. A lower number of days typically signifies strong demand for homes, where a higher number suggests a slower market. In our case, with homes just selling in 19 days, we can conclude that the market is quite active and homes are being snatched up relatively quickly. This indicates a sense of urgency among buyers and may point to a competitive environment for sellers. Now let's talk about the list to sold price percentage, which currently stands at 98.3%. This metric represents the percentage of the original listing price that the home ultimately sells for. A higher percentage suggests that homes are selling close to or at their original asking price, while a lower percentage signifies that homes are selling at a discount. In our case, with a list to sold price percentage of 98.3%, we can infer that sellers are achieving a high percentage of their asking prices. This indicates a strong market where buyers are willing to pay close to that listed price, giving sellers confidence in their pricing strategies and marketing of their home. Finally, let's touch on the median sold price, which currently stands at $416,410. This metric represents the midpoint of all sold prices in a given area or market. It provides a snapshot of the average price which homes are selling. In our scenario, with a median sold price of $416,410, we can conclude that homes in the market tend to sell at this price point. This information is helpful for both buyers and sellers to understand the general price range they can expect when they're looking for or selling a home in the area. In summary, these real estate metrics provide a valuable insight for both buyers and sellers. The month supply of inventory and the 12 months change in months of inventory indicate a balance between supply and demand in the marketplace. The median days homes are on the market gives an idea of the speed at which homes are selling, and that list to sold price percentage helps sellers understand pricing dynamics, while the median sold price provides a benchmark for pricing expectations. By considering these metrics together, buyers and sellers can make informed decisions. Now let's talk a little bit about mortgage rates. While it's true that mortgage rates have seen some fluctuations over the past few days, this week it's been notably calmer in comparison to the previous week. It's all about perspective, and when viewed relatively, this week it can be considered a success. To provide a summary of the week's events, we can turn to this chart's data. Notably, the only instance of significant volatility this week occurred during Thursday's 30-year bond auction. This auction is part of the Treasury Department's routine schedule for selling U.S. debt, and it was one of the few noteworthy events on this week's interest calendar. In a broader context, it's essential to understand that Treasuries act as guides for the bonds that influence mortgage rates, known as MBSs, or mortgage-backed securities. Treasuries tend to stick closer to the tour bus, while the MBS ventures out in search of more unpredictable experiences. However, both Treasuries and MBS generally move in the same directions at the same times. In summary, these real estate metrics provide valuable insights for both buyers and sellers. The month's supply of inventory, the 12 months change in months of inventory indicate that balance. That demand is shown by the median days on market being very, very short. And then, of course, the median sales price can tell you what to expect for your sales price in your homes. And don't forget, those sellers with that 98.3% list to sold price ratio, they're getting pretty much what they're asking for their homes. So that's it for me today. I'm Bru Krebs, your local real estate expert here in Atlanta's Midtown with Berkshire Hathaway HomeServices Georgia Properties. If you do have any questions, as always, about the video, please don't hesitate to comment those below. Or, I'll be more than happy to jump on a phone call and give you the answers, or a text as well. So feel free to call or text me anytime. If you'd like to share something with us that you've learned or that you'd like to know about, or what you know about what's going on in the interest rate, please also consider throwing those in the comments as well. Thank you so much, as always, for considering me your local real estate expert here in Atlanta. But don't forget, I have affiliates all throughout Metro Atlanta, all throughout Georgia, and all throughout the United States who are at the top of their field. So no matter where you're looking to do your real estate transactions or whatever you may need, please know that we have the perfect connection for you. And I'm happy to do that because I love to connect good folks with good folks. Please feel free to call me anytime. It is my privilege and pleasure to serve my community. So thank you so much for tuning into this video today. I greatly appreciate your being here. And if you haven't already, consider subscribing to our channel and clicking that little bell button to be notified when those new videos come out. And if you did find this video valuable today, please consider giving it a like and sharing it with your friends. I would greatly appreciate that. So thank you so much for being here. I really appreciate it. And if you did like this video, I know you're going to love the next one that pops up on your screen.